Good day, everyone. I'm Michael Reitblat. I'm the CEO and one of the co-founders of a company called Forder. And we've been in the, let's call it, bad guy detection space for about 20 years. And 6 years ago, we started Forder to really create a fraud-free digital world. Now, we've seen some presentations earlier yesterday, and you probably all know how fast-growing the global e-commerce is. Online sales, if you aggregate retail and travel and any type of online exchange of value for money or value for value, is about $3 trillion today, growing about 20% globally, and going to hit about $6 trillion in a couple of years. The broader issue is digital interactions. We used to think of them as a consumer going online, going to a website, and it's very clear that every interaction through a computer is digital. But when you use your Apple Pay to walk into a store, that's also a digital transaction. Or if you go to Asia, all the usage of QR codes to identify yourselves to pay for something, it's also a digital transaction. Digital and physical intertwine, but when you look at it from a payment perspective, it shifts from using your card or using cash or using any tangible physical items to digital. What's growing even faster than online commerce is online fraud. If you want to invest in there, I don't know what your partner's agreements say, but it's growing over 60% year over year as an industry. And it's powered by three different trends. The first one, and it's empowering each other. The first one is the availability of data. So data breaches, a lot of the cyber companies before me talked about this, are almost daily news. It looks like no one cares anymore. One company is getting breached every day, and that's just the big one. The ability to use technology to take that data, turn it into complete identities, or leverage it at scale through different companies is becoming more and more available. The term cybercrime as a service has been around for a couple years. And the third part of it is how fraudsters can trade with each other. So instead of doing everything themselves, right, fraudsters don't accept credit cards or any other type of payment. It has to be anonymized and has to be digital, and cryptocurrency helped with that a lot. The more data that's available, the more money they make of using it, the more tools are being built by fraudsters, the more cryptocurrency circulation there is in the criminal world, and so the circle goes and goes. Every online company now that engages with any type of consumers digitally has to be a fraud expert. And it looks something like this. You would have a rule-based framework, and there are a bunch of different companies you can use there. You will plug on average between 8 and 12 different data providers, from companies to tell you where the location of the device is, fingerprinting the device, measuring the behavior or analyzing the behavior of the consumer, analyzing emails and addresses, and other type of blacklists. So on average, about 10 of them. You would use some newer machine learning-based scoring system to analyze all of the data that you're purchasing and funnel it into your rules framework. In the end, about 10% of all online orders today, and I want to remind you, it's $2.9 trillion, 10% of that is being manually reviewed by people somewhere along the chain between the bank, the retailer, the network, the payment processor. Someone in that flow will look at it manually. Just think of how many people that is. And in the end, all the false negatives, so all the losses have to be processed, paid by someone, a lot of fees incurred in that. And it all ends up to about, if you look at it from a retailer perspective, let's take a top 20 online retailer, can't expose any names here, but the numbers are real. The cost for a retailer will be in the millions between the different tools, the people, and the post-damage control processes. They will also incur tens of millions of dollars of fraud costs between credit card payment fraud, return abuse, promotion abuse, account takeovers, loyalty point theft, and so on. But the biggest impact is they will lose almost, in this case, $200 million worth of revenue. That never happens because you try to buy something, you trigger some rule, or your score is too low on that machine learning algorithm, and you're out. And it happens across all industries. In travel, in apparel, in almost any type of digital interactions that I mentioned. If you look at it in aggregate, you see that over $4 billion globally are spent on fraud prevention technologies, tools, data, people, and so on. More than $20 billion are being stolen. So if you remember my slide of how much money is floating in the criminal world for this is increasing more and more. They're becoming more and more successful. But the biggest issue, as I mentioned, I'll keep saying it because a lot of people, when they're dealing with fraud, they look at the fraud side, not on the revenue side, is that over $300 billion of sales never happen, at least not digitally. Maybe you'll try to drive to some store if you have it available, because of faulty fraud prevention. Now, our idea through almost 20 years in that business, and now 6 years in Forder, is that fraud prevention has to be on an identity base. It can't be a bunch of different uncorrelated systems or unconnected systems that are throwing flags around. When you look at an identity, you can actually ask yourself a question, is that identity familiar to us as a provider or as a retailer? Have we seen it before connected to some other identities that we're familiar with, and can we trust it in that context? It enables all fraud prevention to be seamless to the consumer, completely real-time, omnichannel between all the different ways consumers and retailers or merchants in general interact with each other to make sure nothing interferes with the sales process. If we look at the same companies that have showed the damages to their operations before, and we'll look at them one vertical after another, you will see that by switching just from all of this complex combination of technology providers and data providers and internal teams, you're saving a lot of money on infrastructure, you're saving a lot of money on the fraud that's not successful, but most importantly, you're generating revenue. If we combine all the companies that we work with today, which is over 100 companies by now, a lot of them are very large enterprises, probably 10% of the Fortune 500s that are selling anything to consumers are already customers, it adds up to $120 billion of online transactions that are being protected by us from customers in 16 countries, and their consumers being in almost every country, including the Vatican, around the world. When we start engaging with companies, we see that all of them are having some sort of a solution. Probably about 3 years ago or 4 years ago, all of it was what we call legacy providers. Now, about 75% of all remaining companies that we don't work with use legacy tools, and about 25 of them are using more kind of newer technologies that are trying to offer something similar. Our entire approach is ripping and replacing the entire stack, so all the tools, rules, machine learning, data providers, flow management, and so on go out. It's a very simple, almost a single API calls to Forder that can verify the identity, the transaction, the context completely seamlessly and let it through. If you look at the $600 billion that is the US e-commerce plus travel markets, we already surpassed 10% market share of all of it. Now, the market itself is growing about 15%. This is US market. So by working with our customers, making sure that we're in the flow of every transaction that happens, we're guaranteed kind of 15% growth with that market. A lot of our customers are the more forward-looking ones, so they're growing even faster than that. We're recently starting to expand internationally. We open offices in Singapore, in Australia, in London, and the same problems, it's the same fraudsters, it's a lot of the time the same consumers that are had the same issues and now are relying on the same global platforms that we've built. And it all compounds because the more consumers that we see, the more interactions that we see them, the whole system gets better. And what we've started doing recently, probably less than a year ago, engaging with very, very active customers that we have and understanding that when we solve one fraud problem, fraudsters unfortunately don't retire or get a decent job, they just shift somewhere else. Every time you close one door, they find another window or chimney or something to go through. And we're starting to expand the suite of solutions to offer not just credit card fraud prevention, but account takeover, account origination, credit card application, loyalty, and other types of products. And it's, as I said, all compounds. If you look at the process, the more customers we have, the more data we have, the more patterns we can recognize, the better the system performs, the more products we offer the same customers, the more interactions we see the same consumers have with those retailers, the more data we have, the better the accuracy. And it's a really kind of two virtuous cycles that are in this infinite loop of getting everything substantially better. I'll end with the fact that a lot of people talk about network effects, but you need to look at the network effect actually being implemented in the acceptance of the service. When we started, we launched the product early in 2014. By middle of 2014, we were processing 100 million. Ever since, 100 million in kind of annual terms of the sales of our customers. We've been 10xing that number every year and a half, and we're looking to get to $1 trillion within less than 3 years. We surpassed 100 billion late last year, as I mentioned, doing about 120 now. Thank you very much.